Hello to everyone. I am Babar Khan. You are watching my YouTube channel. If you want to learn accounting from basic to till depth, I request to you to subscribe my channel. So, if you subscribe my channel, you will learn free of cost accounting on my YouTube channel. Okay, let's we start. Basic of accounting. First of all, you must know the definition of accounting. What is accounting? Look at the definition. Accounting is an art of recording, classifying, and summarizing data in a significant manner. Okay, I will explain with you one by one each and every item of this definition. Accounting is an art of recording. Look at the bottom. Recording means journal, where we record data in journal. Another underlying part of this definition is classifying. What is classifying? Classifying means ledger. It means from journal we will make the ledgers. And summarizing. Summarizing means trial balance. It means from ledger we will make the trial balance. What is the data? Underline point in this definition is data. Data means raw facts and figures. Data means raw facts and figures. Okay, I will again explain with you the definition of accounting. Accounting is an art of recording, classifying, and summarizing data in a significant manner. It means we will record the data in journal, then we will make the ledger, and then we make the trial balance. Okay, what is the journal? Look at this format. First of all, I will explain with you the definition of journal. Journal means it is a first book in which we record data. In accounting, the first book in which we record data is called journal. Look at the format of journal. Here we mention the date, then particulars, ledger folios, debit and credit. I will explain with you each and everything in I will give you the explanation later. First of all, you only understand what is the journal. Journal means it is a first book in which we record data. And you must understand the format of journal, date, particular, ledger folio, debit and credit. Okay. What is ledger? Look at the definition of ledger. Ledger means the process of transferring debit and credit from journal to concerned account is called ledger. It means if you understand, first of all I explain with you the definition of accounting. I have explained you the journal. Now I am explaining with you the ledger. Okay. Ledger format: date, reference, journal reference, debit, date, reference, journal reference and credit. We will make all debit and credit balance. We will transfer all debit and credit balance from journal to ledger. At this point, you only understand the format and definition of ledger. Okay. Now I am explaining with you the summarizing. Summarizing means trial balance. Okay. Let's we start the definition and format of trial balance. Definition of trial balance. Trial balance statement which show all debit and credit balance of ledgers at a specific period of time is called trial balance. Okay, understand? It means from we will record, first of all we will record data in journal, then from journal we will make the ledger, and from ledger we will make the trial balance. It means statements which show all debit and credit balance of ledgers. It means we will transfer all debit and credit balance of ledgers to trial balance. Here is the format of trial balance. Trial balance format. Look at the format of trial balance. Trial balance as on 31st December 2002, serial number, account name, account number, debit and credit. If the debit and credit balance of trial balance is equal, it means you have make journal entries correct and also the ledger entry correct. So your trial balance is debit and credit is equal. Okay, next we understand the process of accounting. Look at this process of accounting. First of all, source documents. From source document we will make the journal. From journal we will make the ledger. From ledger we will make the trial balance. If you look from source document to trial balance, this is called bookkeeping. Normal simple accountant, he is doing this job, bookkeeping. Source, first of all you have a source document. From source document you will prepare the journal. From journal you will make the ledger. From ledger you will make the trial balance. And from trial balance you will make the financial statements. Okay, what are the financial statements? Financial statement means profit and loss statement, balance sheet and owner equity. I will explain with you one by one. Okay. Next, you must understand the 5 elements of financial statements. There are 5 elements of financial statement: expenses, revenue, assets, liabilities and owner equity. These two items, expenses and revenue, these two items are presenting at the face of profit and loss statement. What is profit and loss statement? This one. Financial statement means profit and loss statement. Okay. These two items are presenting at the face of profit and loss statement. Assets, liabilities and owner equity. These three items are presenting in balance sheet. Okay. Now I will explain with you one by one the 5 elements of financial statement. First of all, look at the definition of expense. Expenses, cost of producing revenue for a particular period of time, is called expense. Okay. Next, what is the revenue? Okay, look at the definition of revenue. It is a price of goods sold or services provided by a business to its customer. Types of revenue. What are the type of revenue? You maybe get the revenue from sale. You maybe get the revenue from interest earned, fee earned, rent earned, commission earned. You understand the definition of revenue? Okay. Next, I will explain with you the third item of 5 element of financial statement. I have already explained with you the expenses, revenue, and now I am going to explain assets. Okay. Assets, resources of business which can be generate revenue for business. It means resources of business which provide benefit to business is called assets. How many types of assets? There are two types of assets, current assets and fixed assets. We will understand first of all current assets. Current assets means assets which provide benefit to business for 1 or less than 1 year. It means any assets which provide benefit to business for 1 year or less than 1 year. It is called current assets. Example of current assets: you have a cash, you have an inventory, etc. There are so many things. Okay, next we will understand the second types of assets, fixed assets. What is fixed assets? Assets which provide benefit to business for more than 1 year is called fixed assets. It means any assets which provide benefit to business for more than 1 year is called fixed assets. Example of fixed asset is machinery, furniture, etc. You have understand the definition of assets. You have already understand the definition of expenses, okay, and revenue. Okay, I will explain with you the liability. It means fourth element of financial statement. I am going to explain with you liability. What is liability? Liability means debt of business or amount payable by business is called liability. In simple word, how much amount business must pay to another party is called liabilities. How many types of liabilities? There are two types of liabilities, current liabilities and fixed liabilities. First of all, we understand the definition of current liability. Amount payable by a business within 1 year or less than 1 year is called current liability. Example, rent, salary, etc. It means any amount payable by a business to any other party within 1 year or less than 1 year is called current liability. And you understand you have understand the example of current liabilities, rent, salary, etc. Okay, another part of liability is fixed liability. What is the fixed liability? Look at the definition of fixed liabilities. Fixed liability means amount payable by a business within more than 1 year is called fixed liabilities. It means any amount payable by a business to any other party more than 1 year. It means after 1 year is called fixed liability. You have the example of fixed liability is fixed loan, owner equity, shares, etc. Okay, now I am going to explain the last part of 5 element of financial statement is owner equity. What is the owner equity? Amount invested in business by owner. It means any amount invested by owner in business is called owner equity. Owner equity, you have, I am going to give you the example of owner equity. Look at the journal format: date, particular, ledger folio, debit and credit. Suppose owner have invested 100,000 amount in business. We will mention here the capital. Owner equity means capital, and we will put at this amount in credit side 100,000, because this is the liability of business to its owner. Hopefully you have understand all this lecture. If you want to learn more, because in other video I am going to explain with you the basic concept and principle of accounting. What is the double entry system? What is transaction? And practically I will give you the example of journal, ledger, trial balance and balance sheets. Hopefully you have liked this video. I request to you to subscribe my channel, because my all new video notification you will receive timely. Thank you so much.